Hello, welcome from Trend Signal for a review of the data and events the week beginning the 27th of November. Last week saw equity markets pick up okay. Again, still the only game in town anyway. FTSE put on a very modest sort of 29, 30 points, which is 0.4%. Dow Jones, Nasdaq, S&P all making new highs again. Dow up at a couple hundred points, up 0.86%. Nasdaq powering ahead again, 106 points. That's just over 1.5%. So no let up there at all. And Nikkei also rebounding, 154 points, up 0.7%. So across the board, really. Big move in the dollar as well last week. I'd say the rate expectations were dimmed slightly following the release of the FOMC minutes last Wednesday. Plus, I guess the markets are focusing on Trump again. It's a bit of a make or break week, well, another make or break week, really, regarding his proposed tax cuts, which are also probably weighing on the markets. But the euro against the dollar, that ticked up 142 points, or 1.42 cents to the dollar. That's 1.2%. Sterling also fared quite well, actually, up 1.13 cents, which is about 0.9% higher. That's following on from a fairly well-received autumn statement, or budget as we call it here, last Wednesday, which confounded a lot of bearish expectations, but that's all put to bed now. We move on, and Brexit remains, of course. So quite a lot of things happening this week. Not so many big important numbers, but quite a lot of events, really. Although we start the week on Tuesday with this Bank of England stress test of UK banks, where the Bank of England releases its results. Carney will be speaking about that at 7:30 on Tuesday morning. Last year, Royal Bank of Scotland failed the stress test and has since managed to address problems with its balance sheet. Certainly has shored it up somewhat. Barclays and Standard Chartered are also, or potentially will come under scrutiny, and that's according to an article in the FT. On Tuesday also, President Donald Trump has a weekly lunch, apparently, with the Senate Republicans in what is expected to be a landmark week, really, where the Senate is expected to vote on the tax reform. That vote could come as early as Thursday. The bill aims to lower corporate tax rate from 25% to 20% by 2019, and also repeal this individual mandate provision in Obamacare, the Affordable Health Care Act. But it is a bit of a balancing act. The Republicans have a majority of 52 to 48, so Trump really needs to ensure he keeps all the Republican senators on side. Not something that he has managed to do really since taking office, so quite why the markets think it will happen this week is interesting. We will see. On Tuesday as well, we also have the US Senate Banking Committee holding a confirmation hearing for Jay Powell. This is the nominee, President Donald Trump's nominee to succeed Janet Yellen as chairman, as it will be, of the Federal Reserve. I'm not sure that we expect much, really, but he is expected to pass muster, as they say, but I guess he could say something that may raise some concerns. I'm not sure, but there's a feeling is that that will go ahead. Wednesday, we have Janet Yellen talking, which is before the Congressional Joint Economic Committee. But the reason why this one's quite important is regarding the economic outlook. So that is something the markets will very much focus on. So that is a defining moment, 3 o'clock on Wednesday afternoon. We also have before that, we actually have the second reading of the third quarter US GDP, or gross domestic product. It follows what some people refer to as the first guesstimate or advanced reading, where not much of the data has been collected. 3% was the first reading, 3.3%, so very positive number if that is achieved on Wednesday lunchtime. Certainly puts in contrast to our own GDP, which is lagging the US quite considerably. We then jump to Thursday, when we have the meeting of OPEC. OPEC and Russia gathering in Vienna. It's not actually listed on this schedule here. They meet in Vienna to discuss extending the cuts that they instigated a year ago. Last year they agreed to reduce production by 1.2 million barrels a day to 32.5 million barrels. That was initially for 6 months, but they extended it. I think the effects took a while to take hold, but they certainly have taken hold when you look at what crude oil is doing, certainly hitting sort of 2-year highs quite recently. And I think the feeling is that they're pretty likely to extend these cuts for most of 2018. In fact, it will be it'll extend it until November next year. I think the feeling is, though, that there certainly is a growing concern that non-OPEC members are taking market share, whilst OPEC attempts to manipulate the price. For example, there's an article in the FT, Oil Price Recovery Clouds OPEC Russia Cuts Plan, and that's basically the feeling that they've gone through the pain at OPEC, certainly OPEC members. Now they want to get the gain. The trouble is they are the reason for the gain, and they can't have their cake and eat it, unfortunately. It's the American shale oil producers that are enjoying this particular one. Okay, let's get back to the calendar. On Thursday, we also have other data out from the Eurozone, the flash estimate for the Eurozone inflation, up from 1.4 to 1.6, which will start to raise issues with the ECB. I mean, obviously that's something they've been targeting, increase inflation, which has been particularly benign. It will be, on the one hand, helpful that it does tick up, but on the other hand, in a controlled way, of course. I think the increase in crude oil price over the last 3 months will be weighing down, will be weighing on prices, of course. Friday, we then have manufacturing data out from both the UK and the US. In the UK, we call it the manufacturing PMI out at 9:30. Another little bit of an uptick from Friday's last month's number, which was a bit of a downtick. Anything above 50 is an expansionary mode, so the manufacturing sector doing rather well, albeit it is only 18% of the UK economy. Contrasting that with the US manufacturing sector, doing particularly well, significantly better in fact. 58.7 was the reading last month. Slight downtick there, down to 58.4, but still a very strong number. That's it. Thank you very much for listening. All the best. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.